And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. This is the show where we bring you where the action is in the broader markets. And we are going to closely examine last week's movement, lots of new sector rotation taking shape and other activity that we will go ahead and get into. As usual, we are going to take a look at where the markets closed for the week. Are we close or above resistance, and what we can anticipate going into next week and beyond? Also, some of those top headline news that drove price action this week and beyond headline news. We did have earnings season beginning, and that was certainly a driver as well. Also, where the current strength is in the markets, of course, as usual, we will get into that. And as always, I do like to explain the driver of that strength. And the purpose there, of course, is to give confidence as to whether there could be a prolonged continuation of that strength so that you can, of course, participate. Let's go ahead and take a look at some of that news last week. First up, earlier in the week, we did see consumer confidence expand in November. The number's a little bit dated, was not quite as impactful. But of course, with the Fed on the lookout for a slowdown in the economy, that uptick in consumer credit and, of course, spending was not welcome on all fronts. Also, we did have several Federal Reserve presidents speaking last week, and one of the more impactful was the San Francisco Fed president, who talked about interest rates. She did see them rising as above 5%, and that also helped stall the markets earlier in the week. From there, we did get the highly anticipated December CPI. That's that consumer price index that's closely watched by the Federal Reserve, came out on Thursday. Markets were rallying into the number as they were optimistic that it would be positive. And by that, I mean it would come in below estimates. And it did just that, not by a wide margin, but enough to get investors ever so hopeful that we are on track for reduced inflation, which of course what is the Federal Reserve looking out for. Weekly employment report, it did come out. We did see employment, it did come in a little bit below estimates. That was good news as well. And then we did today on Friday get news that consumer confidence for January jumped to a 9-month high. And that was something else that helped buoy the market. Certainly some of these retail names, we'll get into all of that, of course. Next week, holiday shortened period, but we do have impactful data coming out there as well with the producer price index, also known as the PPI. This is another closely watched inflation metric that will be front and center as investors pay attention to these various reports. Retail sales and industrial production is also due out next week. So let's go ahead and take a look at those markets and see where did we close the week. We are looking here at a daily price chart of the S&P 500. A couple of metrics that we want to pay attention to here. Of course, the momentum still remaining in positive territory. This is that RSI, a relative strength indicator, up above 50 and trending upward. And then stochastics now very firmly in positive territory. So we can see that the momentum is in constructive territory, very positive. Also, we have the S&P 500 closing above this key blue line. That's your 200-day simple moving average. We have had these rally attempts above the 200 take place in the beginning and the latter part of December. So ideally, we would want to see that remain, because this is that last near-term area of upside resistance. From here, your prior high at 4,100 is your next area of potential resistance. But net-net, the broader markets are looking quite constructive with the S&P above key resistance and positive momentum. From here, let's take a look at the NASDAQ composite. And this was the top performer, up almost 5% for the week. We'll get into that. But what I did want to point out are a couple of characteristics here now taking shape. Last week, we did have what is called a follow-through day. I talked about this in my MEM Edge report because it is highly relevant as it relates to signaling a market bottom. It's not always going to be a true market bottom, but it has signaled every market bottom going back historically. More recently, these follow-through days have signaled bear market rallies. So we can see that the NASDAQ has closed above this 50-day simple moving average. And we also have positive momentum with that RSI and stochastics both in positive territory. Now that we have broken above this 50-day, the NASDAQ, this high growth tech filled index, is much freer to roam and trade higher. Next area of upside resistance here is this 200-day simple moving average. So let's go ahead and take a look beyond these metrics, these larger index looks, and share with you here the 11 underlying S&P 500 sectors. So this is something that we do each week, highly important, because not only do you want to be able to uncover where that strength is in the markets, but also on the lookout for rotation. So here we are. I've had added an RSI indicator, sorted this 2-month daily price chart view by this in descending order. So up here in this upper left quartile are your stronger quarters currently. Your stronger sectors. And this view is not going to be very whippy. You're not going to see groups go from this top quartile and then instantly slink down to this lower. It is generally a slower move so that you can, in fact, spot these rotations. And one rotation we've been talking about, this is the 3rd week in a row, is the fact that we've seen these defensive utility, healthcare, and staples areas that had been up here in the forefront for a good part of December are now in this lower quartile. We've seen a rotation into newer areas. Most pronounced, of course, is commercial services, XLC. One of the heavyweights in this particular industry group, 2 of them are Netflix and Google, and they are both on the move, up over 5% for the week. And there are other areas within commercial services that are on the move as well, such as telecommunications. I would urge you to dig in. Some of these higher yielding names in this area are trading higher in this current market. However, the overall group dynamic, we do still have some overhead resistance there at that 200-day. So let's go ahead and progress further. I mentioned earnings season, and it was all about banks this week. We can see that financials are up here in the forefront by way of strength. However, as an overall group, it was up only 2.1%. I'll share with you some of those bigger bank names that reported this week, the response, and what to be on the lookout for there. However, we can see that overall the financial group is poised for a nice 6-week base breakout and lots of nice volume shaping up here. It also is relevant to know that insurance stocks are on the move too, and that's a big part of financials as well. Let's take a look. Basic materials had a very nice move this week, up 4.4%. Again, another area that I highlighted in last week's MEM Edge report, because we did see this downtrend reversal take place, all about the earlier than anticipated reopening of China. And of course, China is the #1 importer of a number of metal stocks, steel among them, gold, iron, and so on. So we are seeing a nice rally shaping up here, nice base breakout, and your MACD very early in its downtrend reversal. So lots of vibrancy in the materials sector that I anticipate will continue at least over the near term. Industrials up here at the forefront, another group we highlighted last week in my MEM Edge report, because it also was exhibiting very bullish characteristics in its price action. One would not necessarily run to industrials when the markets turn, but there are pockets of strength in here, and I will share with you some names that reported strong earnings last quarter that are still quite elevated. So let's go ahead and take a look at some of these weaker areas. And again, we mentioned that it is primarily in these more defensive areas as we see basic materials, communication services. I would be remiss to not take us to the technology sector, third best performer of 4.6%, still in the throes of convincingly reversing this downtrend. But in this next segment, I will share with you two areas in tech that are on the move, with one of them posting a downtrend reversal. So keeping an eye on this nice progression here among technology. Of course, we can take a look at those mega cap FANG names. Apple and Microsoft are the two heavyweights in tech, and they also outperformed the markets last week. So let's go ahead and move forward. Take a look at some of the industry groups that are beyond those sector ETFs. And these are ETFs that I find very powerful in, again, staying on top of where the movement, where the strength is. And from there, you can then, of course, drill down. So this, again, is a 2-month daily price chart view, sorted by that relative strength, and take a look up here at the forefront. I mentioned basic materials. We can see GLD, gold, on the move, up about 3% for the week, very much in a confirmed uptrend and appearing to poised to trade higher. We are a little bit overbought here with that RSI up there above 70. However, we've seen that historically, and it has been able to develop a newer high. I would argue that it is oversold, and I would look for a pullback for any potential entry point. Small cap stocks, the best performing for the week, up 5.5%. And we can see just how much this index has gained over the last 2 weeks. In fact, nice high volume characteristics, your momentum by way of MACD just entering into positive territory. This is what you want to see, because small caps are another area that have attempted to reverse their downtrend repeatedly above that 200. At this juncture, we are well above that. A quick view, the Russell 2000, of course, has 2,000 names in it, but always of note for my work, I want to see where is that underlying strength among the Russell 2000. And I will tell you, having done a deep dive, it is primarily healthcare. A lot of these small cap biotechs really up double digits in the face of FDA approvals and other positive news. And then there were other small cap areas as well that I will share with you as we move through this particular view. Let's take a look at retail. I mentioned that retail, not sure if I did, but it has had a significant move last week. Consumer discretionary was the top performer, up 6.7%. A lot of that having to do with Amazon and Tesla. Amazon up 14%. We're going to take a look at that chart. And then Tesla had a nice 8% rally as well. Big heavyweights in that consumer discretionary. But let's take a look at XRT. This is the S&P 500 group for the retail ETF. And we can see this nice advance up above this 200-day simple moving average. Lots of underlying vibrancy taking shape here, as it began with Costco pre-announcing their December sales numbers were quite good, but the trickle down really within this group has been among select groups such as shoe and apparel related and others that I've been highlighting. And we can see that retailers are definitely on the move higher, helped, of course, by consumer confidence numbers today. Let's take a look at some of these other groups that are on the move. We can see IGV is software, and the group was up quite a bit this week, almost 5%, but it is still languishing. A lot of these high growth software stocks are really down and out. Many of these names still 50% plus off their lows. But nice to see this 5% rally. This is the area, should we see interest rates continue to climb, and they have gone down. We'll look at that here recently, but going forward, it does have that tendency to get hit the hardest. Let's take a look at another area of technology. I talked about one area that did reverse its recent downtrend. And here we are. This is SOXX semiconductor ETF. It has broken back above this 200-day simple moving average. Nice positive momentum indicators. We did have two semiconductor stocks that announced earnings that really got this group going, not only because they came in above estimates, but because management was positive on the growth prospects going into 2023. We are going to take a look at those two names and, of course, share with you some other areas in the semiconductor space as well. One area you do want to be aware of too, actually, and that is interest rates. As interest rates rise, this is when growth stocks in particular really can get hit. We can see this deterioration continuing. This is the yield on that 10-year treasury. It's now down at about 3.5. And 2 weeks ago in my report, I was writing about the yield on that 10-year getting awfully close to that 4% level at that time. That is a level that is viewed very ominously relative to growth stocks. But this nice pullback in interest rates is another backdrop case for growth stocks that are being elevated. Also, we do want to be aware of this volatility index. This is that fear index. And of course, you want to see it deteriorate or decline. And we can see that it closed down here at about that 18. I'm going to pull up a weekly chart here, just take us back to some of these other periods when volatility did get low. And I will tell you, they did mark periods when the market did at some point in time reverse. But for now, we are going to be pleased that that fear index and volatility is down below that 20 level. So from here, let's go ahead and take a look at, I mentioned to you a couple of semiconductor names in particular that reported their earnings and were highly impactful as it relates to other semiconductor stocks. So first up here is a company that reported the week before last. This is AEHR Test Systems. It's a smaller cap semiconductor stock. What you can do with StockCharts is pull up that full quote, and it will provide you with that market cap information, 800 million. But of importance here is the fact that they came out with very strong numbers. The stock gapped up and had a nice continuation rally, a little bit of stalling action this week, but certainly anticipated after this significant upward move. This in turn pushed a number of other semiconductor stocks up. Not all areas are participating as evenly as you might anticipate. There are areas that are outperforming. Let's take a look at another company that came out with their numbers yesterday, and this is a much larger stock, Taiwan Semi. TSM is the ticker symbol, and they did come out with numbers that were ahead of estimates. And then, of course, management too was positive going forward. So we can see this gap up, very big volume, break above that 200-day simple moving average, which in turn did help a number of other semiconductor stocks go on to outperform the markets. Let's take a look at some of these bank stocks that reported. It was a bit uneven. I'll begin by taking a look at Bank of America, these well-known major money center banks. And you can see on the release of the report today, the stock initially pulled back. Buyers came in on the dip. The stock was able to break back above that 50-day on very nice volume with outside momentum in positive territory. We can take a look at a couple of other companies that reported as well. Citibank also group up above this 200-day, nice high volume as it continues to trade higher. These bank stocks are the first to report, and a positive report coupled with positive response can bode well for a nice positive earnings season. So here is JPM, and this is a formation here with this candlestick that is called an engulfing bullish engulfing candle, where the stock price breaks below the low of the prior day and closes above the high. Very big bullish engulfing pattern, nice volume and bullish characteristics on the momentum. A little bit overbought, but that was another bank stock. And I will share with you that not all bank stocks had super bullish responses. Here's Wells Fargo. Again, that initial pullback does evolve into another bullish engulfing pattern, but it is still below that 50-day simple moving average. Let's take a look at another area and some other companies that came out with their earnings. And Delta Airlines, these airline stocks were really on the move this week. In fact, if you look at the S&P 500, the top four performers for the week were airline stocks up, I would say, about 20% each, and Delta was among them. Now, when we have this type of rally into earnings, very often you will see a pullback despite positive results, which in fact we did get, but the stock did close in the upper trading range for the day, which is constructive after pulling back to this 10-day simple moving average. Now, I did talk about the early reopening of China. This is something I talked about in my report last week, is very impactful to select areas. This is MCHI, the MSCI China ETF, and this is that gap up on that reopening news, a continuation rally. Airlines and other travel stocks certainly highly impacted by that news, as travel is expected to open up with COVID restrictions being reduced. Another area that we did see at least one company report earnings, and it has been generally a positive area, and that is KVH Homes. And you can see they were an early reporter of earnings. We can see this gap up and continuation rally in these building stocks that are continuing to trade higher. In the metal space, CMC reported, Commercial Metals, and this is another stock that had a very bullish response to positive earnings. So I think you can get the sense that we are seeing a bit of a theme here as it relates to earnings season so far. I would argue 2 out of 3 have had very bullish responses to earnings that have come in ahead of estimates. I'm going to take a look at a couple of other within retail. I did mention to you that Costco came out with, they pre-announced December sales. It was not necessarily their earnings, but we did see other retailers come out. This is PriceSmart, PSMT, gap up and continuation rally taking shape with that particular name, and some of these other stocks in the consumer space. And also among these consumers and retailers, we are seeing pre-announcement prior to coming out. Wendy's is due to report after the close. Management came out ahead of that release and reported strong December same-store sales. And again, that bullish response to the report, where we have this significant, in this case, 6% rally that took shape. Now, from here, I did want to take a look and share with you in that metal space some of the areas that are newer as it relates to potentially turning around. And this is going to be good for your watch list as the move, we talked about gold and the significant move off already taking shape here. Let's take a look at Livent, LTHM. This particular company is one of the largest producers of lithium. I will share a view of the largest one, but lithium, a key component, of course, in electric vehicles and other areas. And you can see that it has this nice V-shaped recovery taking place, momentum shifting higher. And then ALB is certainly the larger in this space, also potentially exhibiting that. Not quite ready for prime time yet, more of a watch list stock that you can keep on your list as these basic material stocks potentially continue to rally higher. From here, I'm just going to share with you a couple of stocks from last quarter and the response to their earnings. Some of you may have forgotten. This is GFF in the construction space. Let's take a look at a couple of other names in that space that had super strong earnings, gaps up, and continuation rallies. A lot of these names are recovering going into this quarter's earnings. This is AAON, a small cap construction stock. Take a look at this momentum, this MACD poised to turn positive with that RSI looking very constructive there. One other name, same space, also had strong earnings last quarter, LYTS. and this nice continuation rally. Pointing this out because it is with anticipation as we head into this earnings season with very greatly reduced expectations for earnings. We could see a continuation or similar price action. ADT came out with strong numbers, pulled back to its 50, and is now poised for a nice breakout. ROST, one of the many retailers from last quarter, gap up and still remaining quite constructive. Let's take a look, and I will end it here with a view of some of the companies that are due to report earnings next week. First up is Goldman Sachs. It's going to be in the category of those larger money center banks, and you can see this rally in anticipation of the release of their earnings. But what I did want to point out to you here is that MACD just entering into positive territory. We can see by historical precedent that the stock does tend to have these prolonged rallies once it gets going. Nice high volume characteristics as it breaks above this 50-day simple moving average. Also due to report next week, another airline stock, United Airlines, already has had a very strong rally. Now, similar to Delta, of course, should we see good numbers, I would anticipate a pullback simply because we've had that anticipation rally already take shape. SIVB, well-known bank stock, also due to report next week. Not quite as vibrant, but in a nice uptrend. Consumer staples, Procter & Gamble, due to release their earnings next week. And then also AA, that of course is Alcoa, and a very well-known metal stock, which will be front and center on people's minds as well. So everyone, I hope you have a fantastic long weekend. For those of you that haven't already, I urge you to trial my MEM Edge report.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.